Let's bring in someone to talk markets now. Eric Freedman, Chief Investment Officer of U.S. Bank Asset Management, which has $505 billion in assets under management. What do we want right now? What does the market want, Eric? Does it want more rate cuts down the road so softness is okay? Does it want rip-roaring earnings? Does it want clarity? What's ailing it?
Yeah, I think it's a combination of the above, Joe. Probably the biggest factor we're focused on is, number one, will consumers hang in there? We're starting to see some deterioration at the margin. Specifically, if you look at lower-end consumers, that's been well documented. I think the prior guest did a good job going through that issue. But it's really a matter of will that core consumer slow down beyond the lower-income consumer. We actually rate consumers scale of 0 to 10, 0 being worst, 10 being best. We've gone from an 8 to a 5 in relatively short order. It's been an orderly move lower, if you will. But I think that the first piece is will consumers really stay involved. I do think that the clarity on the policy front is probably more just on the idea of what's stop-start versus what is truly game on. If you think about even little things like the buildings in D.C., are those really for sale, those not for sale, what's happening with tariffs? There's just those incremental things at the margin that we as investors want a little more clarity on. We don't need perfect clarity, but
why do we even think that inflation, as it relates to tariffs or the uncertainty of tariffs, is somehow a temporary measure? That's the thing that I don't understand. I mean, we just lived through this. I think everybody knows the game, which is when prices go up, prices stay up.
Yeah, I think, Andrew, to that point, one of the things that we looked at for the last 2 months, the University of Michigan consumer data. Look, consumer data and surveys are softer surveys at times, but still, the American consumer isn't really buying the idea of temporary inflation. They have this idea that, look, inflation may come in north of 4%. The Fed does not care about politics. The Fed says, look, if it's going to be a embedded inflation expectation where workers are demanding more in terms of income, that's going to be more embedded. That it will not be temporary whatsoever. So I think
that 4% wouldn't even be tariffs. How much is left over? 3.5 at least. What are you talking about? What's the margin that's being caused by tariffs?
Yeah, I think that there's probably an extra half to 75 bips that are somewhat above the current run rate. Run rate, I think the expectation is that sans tariffs, we get down to 2.5% real CPI. If we see the tariff layer on top of it that could be more stringent, again, this is before Europe even comes into the picture. That's the thing that I think is really key.
It adds a half to 3/4?
Yeah, I think it's a half to 3/4 premium on where the psychology is.
So what's ailing consumers right now? Because it hasn't happened yet. So is it just the expectation of something happening? They eating a lot of eggs? What's happening?
Yeah, I think it's the cumulative impact, Joe. I think that if any, it's almost like the runner on a treadmill. If that ramp remains elevated in the form of shelter costs, food costs, transportation costs, if they remain elevated, that runner will slow down. So it's not so much what's necessarily net new. It's really about what has already happened. And that cumulative impact, we think, is starting to weigh in. It's starting to move up the scale of income beyond just the lower income consumer.
It's odd to watch that the anticipation or the assuming jobs are going to weaken. We haven't really seen it yet. Maybe it happens tomorrow. Assuming inflation is going to come back. We haven't had a print that shows 4% yet. We've had 3 prints that were a little bit higher than what we saw. But so can the expectations of these things be self-fulfilling?
Yeah, it could be the great Billy Shakespeare, much ado about nothing. Ultimately, people worry about things.
Or it could be real and then it happens.
Yeah, that's right. I think there's always this notion of markets front-running. Andrew made a great point of that earlier this morning, that markets tend to front-run what actually happens. I think there's a little bit of a premium, probably an excess premium on inflation expectations. But I do think that for consumers, that cumulative impact is starting to make a difference.
Well, you think the S&P is going to hold or not?
We do. We think 60 is our target, 64.80. That's 24 times 270 operating profits for this year. That's about, it's a little bit of a discount to consensus.
That's a nice gain.
Yeah.